Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 27th of April. Starting off with Chariot, which is looking increasingly good, I have to say. We got the unfilled gap to the upside. We actually had another gap at the turn of the month as well, but that was filled. But that unfilled gap to the upside through old resistance, a very strong signal, as is the what looks like a mid-move consolidation, something which could take the shares up towards the highest resistance line there, up to 40 pence, perhaps over the next 4 to 6 weeks. Upside valid while we hold above the recent double support there around 18.5 pence. And end of day close through 26, 27 pence, or 27 pence rather, could be the trigger for that move to 40 pence plus. So let's see if Chariot can come up with the goods. Onto a stock which has not had such a great ride in the recent past, but a bit of consolidation here at Eurasia. Got the first glimmers of a support line there from back in March. That's around the 8 pence level. We're sort of bumping along the bottom there. What we'd really like to see, though, is an end-of-day close through that February resistance line. And really, to be clear of that properly, an end-of-day close at 9 pence plus would have to be delivered, or should be delivered, and that would then take us up to neckline resistance at 13.5 pence, possibly over the month following that. But the whole battle here really around 8 to 8.5, and let's see which way Eurasia will swing. Obviously a stronger day today. On to a stock which doesn't get much airtime here, but hopefully today it is going to get that. Here we've got Great Southern Copper, and as copper is obviously rather hot at the moment, worth looking at it anyway, but we've had that bumping along the bottom there going into this week, and a nice jump that we've seen now. View now is that if we get an end of day close above the March resistance there at 4.25 pence, we could be heading up to the top of the broadening triangle from back in December, as high as 5.6 pence over the next couple of weeks. But this looking rather strong, and maybe that would be almost like the minimum we would expect while we're above 4.25 pence on Great Southern Copper. The big mover of the day, which I think has delivered the goods on the charting front and many other fronts, I suppose, is LoopUp, which is gapped up, and the current situation is that we've actually nearly filled the top of that gap down back in February. That was around the 12.5 pence level. We've been looking for 14 to 14.25 as the target here, which looks as though it may be hit relatively easily. Stop loss at the moment, an end of day close above or below the old gap there at 11 pence, probably the way to go at the moment. But 14.25 initial target. If we're really lucky, the shares will keep on moving, and we'll get a target towards the 20 pence zone, and that would tie in with the falling 200-day moving average that we've got there at 2021. But looking very exciting there at LoopUp, perhaps rather more exciting than many in the market would have expected. Obviously, the fundamentals are a factor there as well. Moving on to one of the stocks of recent weeks, which has continued to impress. Live Company, get the name out. Here we've hit the top of that rising trend channel at around the 13 pence mark. Retraced off that, which is not really surprising, but still looking for the top of this rising trend channel from December, maybe peaking out at 14 pence over the next couple of weeks, something like that in terms of the time frame. But the upside certainly valid while we hold above the earlier April peak at 11.5 pence on an end of day close basis, and really want to stay above 10 pence to try and get that 14 pence target, and maybe there's much more on the cards at a later date. Rather thin day for bullish prospects in the Bulletin Board Hero, so we're looking at one of the more illiquid situations. Here we've got One Media. Looks as though we're in a broadening triangle there, with the top of the triangle there heading for 9 pence, which would obviously be quite nice. The bottom of the triangle was basically a double bottom, a double bear trap bottom there below the old September low, around 8.5 pence. 6.5 pence. Let's get the number right. And the real highlight is the bear trap gap reversal that we've had just in the last week. So we made a new low and then gapped through the 50-day line. One of the positives is also the way that the 50-day moving average is rising. If you see that near the lows, that's normally a pretty good sign, and that could take us up towards the 9p broadening triangle top, perhaps as soon as the next couple of weeks or so. I suppose in the near term, or the recent past, power metals normally famous for just putting out almost an RNS a day. But luckily, over the last week or so, there seems to be a decent share price breakout. We've broken that August resistance line there, and the 50-day moving average, which is now rising, so another plus point. Just taken out the 200-day line as well. So it looks as though the top of the November trend channel at around 1.95p is the minimum on the upside here. And after that, obviously, we could head up to post-July resistance at 2.5. But certainly, while we're above the February resistance at around 1.5p, 2p or so, looks to be fairly well nailed on. Onto a stock which has been chosen largely on the basis of the latest jump in gas prices. I suppose if shares of Prospex are going to rise at any time, now would be the time to do it. Got a bit of resistance there around 4.25p, so at end of day close, if we can get it over the next few sessions through 4.25, could take the shares up to the top of that channel there, as high as 7.25p, maybe on a 1 month or 6 week time frame. But shares seem to have seen that the floor of that channel there around 3.95 and looking poised, let's say, for a move to the upside. Only back below the 200-day line at 3.5p, really delaying the prospect of a move higher. On to another stock with this pretty strong gap action, pretty impressive actually. We've already had 2 gaps here on Shearwater, and one was sort of effectively a bear trap gap reversal. Second massive gap through the 200-day moving average, which is perhaps even more impressive. New support has come at old resistance, which is 125, and above that we're looking for at least 170, maybe 175 over the next 4 to 6 weeks. As I said, the turnaround there with the bullish divergence as well, looking like it's a serious re-rate for the shares already underway. Finishing off with a stock which had a flash in the pan jump the other day. Here it's going to be interesting to see how much Woodbois retraces. The support there is old resistance from August at 5.2p, so ideally the shares find support between 5 and 5.25, something like that, and then we might get another run at the top of that trend channel from this time last year as high as 9p. But if you're cautious, maybe just wait for an end of day close through 6p and then hope that it's a decent momentum situation. That's it for me today. More updates tomorrow.